Hey traders, Jason here with a special urgent update. The stock market is falling. We're going to zero. The world is ending. Okay, yeah, enough with the dramatics. If you've been watching my videos every weekend, I've been saying I kind of expect this move, right? This past weekend, I actually said I thought we would kind of rally early in the week and then roll over. The big boys are coming back to play, and they surely came back to play. So make sure you check out that video from this past weekend. I said we were probably going to rally up to the point of control, probably with the 200, and then probably reverse from there. I'm still expecting one more downfall. So with that being said, make sure you guys hit the like button, subscribe, and make sure you check this out real quick. If you want to help sponsor my channel and get some education at the same time, make sure you check out my coaching and mentoring service. I've been day trading the S&P Emini futures, stocks, and options for the past 21 years. You can learn any of my trading strategies if you want to learn how to trade stocks or options, or just trading psychology. I charge $40 an hour, or I have a special 3 hours for only $100. So make sure you check out my website, daytradingfearless.com, for more information, or send me an email, jason@daytradingfearless.com. But let's get right back to the show. Okay, with that being said, let's get back to reality, okay? The market is not going to zero. The world's not ending, okay? Today was a down day. If you kind of let the charts tell you what exactly is going on, then it's kind of a lot easier, right? Look at levels where we could rally to and then reverse from. And with the CPI data that we had this morning, it's kind of showing even with gas prices falling, there's still inflation. Now the problem is the housing inflation, right? Rental was up. I think that's the number that spooked it. But on the bigger picture, one of what I think brought this market down, two things. I think it was its options expiration, quadruple witching this week, right? And also, like I said in my video this past weekend, the big boys are coming back to play, okay? And they are picking a direction. They've been at the Hamptons, kind of letting the junior traders play around, rally the market up to 4,300, bring it down to 39. Okay, yeah, they're like, get back in your little cage and let the big boys show you how to really sell off a market in one day, right? And that's what happened. Now, one of the things I'm going to say is this is opportunity. This is why I'm making this a special midweek video. There is opportunity coming into the market right now. And I don't want you to be afraid of it. I want you to embrace it and look at it as, hey, this is maybe where we're going to make a lot of money in a couple days potentially, right? Now, let's kind of analyze the charts real quick. We do have a shoulder, okay, right here, a head, a shoulder. Here's our neckline, okay, if you want me to draw this out for you a little more. Here is our head and shoulders. Let's now grab our Fibonacci extension, okay, and try and get some levels of where potentially this market could go, right? And as you guys know, I've been calling for one more low, probably September or October. I've been calling for this low all summer long. Go back and watch any of my weekend videos. I've been saying I don't think the lows are in, and this may be kind of the lows. And I've also said we'll probably do this in September, October. I've been doing this for 21 years. I understand market cycles. I understand what charts are telling me, and there's really nothing good, I hate to say it, happening right now in the markets to really make the market have a rip your face off rally like we had last year. Everybody was buying every dip. Now they're selling every rip. Understand what's going on, right? Every time we rally, they kind of sell the market off, right? Now, with that being said, we have the 127 right here at 37.92. We have the 1618 at 36.38. Okay, which would take us essentially to a double bottom low or lows, right? That we had, and then eventually the 200 period moving average is 34.69. Okay, I've been calling for, I have this white line in about 3400. Why this 3400? Because that was the previous high, and let's go out a few years, and it was essentially the previous high before what happened back in March of 2022 or 20, right? Before we had the big sell-off. Okay, that is a major inflection point to where I think we need to come back down, fill that, and then the market could start working. The Fed's probably going to raise 100 basis points in the next Fed meeting that's coming up. I think that's what the market's afraid of. And I also think with all these hard interest rate or big interest rate increases, 75 for the last couple, 50, right? They'll probably do another 75. That's actually going to come in and start to hurt the consumer. And here's the problem, right? Even though nobody wants to call it recession, except for I called it way back in, February, March, that we were in a recession. It was a couple weeks after. And guess what? When the numbers came out in, I believe it was June, I was proven correct. Again, this video is not me trying to show off and flex on you and tell you I'm right. I'm just telling you guys, and you guys know I'm pretty humble, that I've been making a lot of right calls throughout this entire year, okay? And I just believe one of the problems that we have now coming into the next few months is the Fed wants to put us in a deeper recession than we already are. And in their case, in their words, we want to go into a recession, right? We're already there. The negative GDP is what it's been for the last 50 years, and you can't change the rules halfway during the game. If you agree with me, smash that like button, throw a comment in there. But with that being said, I want you guys to really kind of think about what's going on right now, right? People are going to start losing their jobs, which is sad because you have the Fed who created the inflation by by buying mortgage-backed securities, by pumping up house prices with really low rates and having people buy houses that they really couldn't afford per se, or just brought rates down to have the same but had to go up in value in houses. And so everybody was making a lot of money for the last couple of years, and then with all the money going out. But here's the problem that nobody's talking about: wage inflation. Okay, I mean, you have a lot of people that were making $9, $10 an hour throughout the country a couple of years ago. They're now making 16, 18 bucks an hour. And we're talking the Starbucks, the Walmarts, the Targets, right? That's a huge wage increase. And everybody thinks this inflation's coming back down. I hate to say it, I think this is the new norm. I think these numbers are going to stay here for a while. The reason I say that is because one of the problems is wages aren't going back lower. I mean, California now wants to pay people who flip hamburgers. No offense if you do that, but 22 bucks an hour. Okay, I'm 48. Back when I was 16, that was a first job to learn job skills, right? Learn how to wake up and go into the job at 6 a.m., okay, and get everything up and running for the day, right? Or work until 10 p.m. at night. Okay, these were skills that we had to learn. So later on in life, we understood how we had to be on time, okay, and build up these job skills that we never had at that age. Now, it's like some of these politicians think this should be a career that you should be getting paid what, 40 some odd $1,000 a year for flipping hamburgers. I think we're in bizarro world right now. But with that being said, that wage inflation is going to stick around for a long time. And the hamburgers are not going back to the dollar menu. It's now going to be the $3 or $4 menu, right? And it's if you were making $25 an hour digging ditches, you're like, let me go flip a burger for $22 an hour. I mean, and really not have to work as hard. And so I think there's a lot of things broken in this market. I think we still have a ways down. But with that being said, I also think there is so much money out there that I think we're on a different level. Right? It's kind of like, I think it's the haves and have-nots that has gone really, really wide. I mean, think about it, right? Football players, if you were a quarterback 10 years ago, dude, you were lucky to sign a $15 million contract, right? And that was like the best player. 5 years ago it was what, 25 million, and then all of a sudden within 3 years, now these guys are getting paid 50 million guaranteed. Lamar Jackson, give me a break. You don't deserve it. I mean, what other job? CEOs of these companies these big companies don't even make that much money a year. And it's crazy how much they're demanding, right? Lamar Jackson's like, I want it all guaranteed. Well, hey, Dak Prescott just showed you why you don't guarantee any money. Zeke, I love the Cowboys, but give me a break. The guy breaks his thumb the first game of the season, okay, after getting paid all the money last year, and now he ain't gonna play for 10 games. TJ Watt, same thing, right? So there's so much money out there that this inflation is here to stay. Housing, yeah, listen, housing's coming down, but that's all the froth. Everybody's stuck in their house. Nobody's moving anywhere, I believe, right? It's one of those things where everybody's rate locked. Everybody has real low rates and they have equity in their house. But then the people that are trying to sell their house and marking 30, 40, 50,000 off their house are two people. That's it, two people. It's the home builders and also the flippers. Nobody else, okay? Because most people that got a 3% loan, and I take that back. There's a few people that got moved for work, whatever. But I'm saying a majority. I'm not moving from Henderson to Summerlin when I have a 3% loan and go get a 6 or 7% loan. Okay, and go buy a house, for 20 grand cheaper? Because I could probably barely sell my house, right? But it doesn't mean the stock market's crashing because there's not going to be a ton of supply. Now, this is me going on a full-on rant. I know some of you guys love my rant. If you do, smash the like button if you're this far in. But these are things that if you really think about moving into the future, this inflation's here to stay. It doesn't matter what the Fed does, okay? All they're going to do is destroy jobs, destroy people. And then what's going to happen is people aren't going to be able to pay for their mortgage because they lost their job. Well, guess what? The banks are just going to come in. They're like, we don't want to deal with all the, foreclosures like we did 15 years ago. So guess what they're going to do? Oh, forbearance here. Don't make a payment for another 2 years. Oh yeah, how's that going to really work out, right? And so we just keep digging ourselves a bigger and bigger and bigger hole. Now, with that being said, I believe this starts to feed upon itself more and more in the coming months. And that's why I don't think we're seeing all-time highs anytime soon. With that being said, this is opportunity. And I will tell you why, because we can now go and start selling premium way, way out of the money. If we come over here, okay, and I'll give you guys an example. And let's just even do the MES, right? Which are the micro futures, right? And let's go out to December. Okay, and let's look at all these contracts. Look at what you could sell. I get it, it's not a ton of money, right? 94 days, but $3, $2.50, okay, for the 2,000 puts, okay. Dude, we're at 40,000. That's a 50% drop from where we're at currently. I don't think we're going anywhere near that 2,000 level unless there's a black swan. That's a whole different story. But with that being said, I think this is where you embrace it. You look to sell volatility, wait for us to really sell hard on those panic days, and you come over and you look at the 2,000. If we sell off another 400 or 500 points in the next few weeks, even days, right? And to these 2,000 that you could sell for we'll say 275 if you go mid price 285, might be worth $4 or $5. Okay, and you just start hammering them. Maybe you go to the big contract, and then any bounce, all that volatility just gets sucked out, and these things become worth $1 literally on a 300 or 400 point bounce, or within a few days. So hopefully that helps. Sorry about the rant, but I just want to kind of keep things in perspective for you guys all. And until next time, be safe out there. Use this as opportunity. And also, if there are stocks you like, this is a buying opportunity, right? Things are going on sale, and we all love a sale. So with that being said, be safe, and we'll talk to you soon.